When I look back in my own trading journey, price action is the only trading approach I've ever found to be profitable. And I tried a lot of things. I tried indicators, I tried algorithms, I bought courses and everything like that. But price action has proved to stand the test of time. But it's such a weird approach to the markets, right? I mean, think about it. The Forex market alone is a $1 trillion industry. That's a lot of money. It's a huge industry. This is not some online side hustle that you start on the side, right? There's big banks involved, interest rates, big decisions being made, countries exchanging currencies. And you telling me I can make money just by drawing some lines and squares and call them trend lines and support and resistance? Get the fuck out. What's happening, people? My name is Afonso and this is Afonso Analysis. If you are new here, this is a channel where I talk to my broke hustlers. This is a channel I talk to the people who have very little to no money to start trading with, because I myself started trading with a free $30 that I got from XM Brokers as a welcome bonus. And I managed to grow that to a point where I'm now making a living from it. So if you are somebody who's been giving yourself excuses that you don't have money to trade with, make sure to subscribe to the channel, smash the like button, because every week I come in here and show you different ways where you can come up as a broke Forex trader. In today's video, we're going to talk about price action. But price action is such a broad topic, right? There's a lot of things involved in price action. If you go on Google and just type price action, you're going to find a lot of information. You're going to find price patterns, support and resistance, higher highs, higher lows, candlesticks, wick rejections. You know what? It's a lot of information to take in, and I'm hoping in today's video we can narrow it down by sharing my own trading approach. Now, before we continue, guys, I do want to say that everything I'm going to say here is of my own opinion. I'm not a financial advisor. Trading Forex carries a high level of risk. So make sure you don't trade with money that you can't afford to lose. And if you do understand that, let's keep it rolling. So what is price action to begin with? Well, simply put, price action is trading without indicators. Trading price action is a true definition of an independent trader, because you literally depend on price. You're literally trading what the price is doing at that point in time, hence price action. So the first most important thing to understand about price action is candlesticks, because candlesticks are the ABCs of the market. If you don't know what are candlesticks, I've already made a full detailed video talking about candlesticks. I'm just gonna pop it on the screen here. Just make sure you click that and you can watch that candlesticks. I'm also gonna leave a link in the description. You can watch that video after, but make sure you understand candlesticks first. So once you understand candlesticks, different types of candlesticks, or just how candlesticks form, the second and most important thing to look for is key levels. Now, some people call this supply and demand. Some people call it support and resistance, but simply put, these are areas of interest. Support and resistance, or key levels, are areas in the market where the market is finding really hard to break to the downside or to the upside. So once you understand candlesticks, you'll be looking at these key areas and watch very closely what the candlesticks do when they get to those areas. Are they gonna break to the upside? Are they gonna fail to break and reverse to the downside? Or vice versa, when the market is pushing to the downside, is the price gonna fail to break to the downside, or is it gonna react and then push to the upside? And if you are getting lost here, traders, just stay with me, because I'll be sharing with you my full trading strategy so we can put this whole thing together and really understand the things that I'm looking for when I'm trading here on these charts. But for now, just understand the concepts that I'm looking for. Number one is candlesticks. Secondly is these key levels. And number three, and the most important of all, is price patterns. One of the biggest mistakes I used to do in my trading is I would want to trade everything that I see. But what I've learned through experience is to pick 1 or 2 price patterns or even 3 price patterns that really resonate with you, so that you are not confused when you get into the charts. Whenever you see these price patterns, you execute. Now, personally, I trade double tops or double bottoms, a break and retest, both to the upside and to the downside. But we're gonna get to that in a minute. But price patterns are really, really important. Let's move on to how the price moves, because in order for you to identify these price patterns, we need to understand how does the price moves, because I always say the forex market is not a chaotic place with just candles moving up and down randomly. It moves in a rhythm. The forex market cannot trick us otherwise. Either it's pushing to the upside, or it's pushing to the downside, or it's just consolidating and not doing anything. Personally, I don't trade consolidating markets, so we're just gonna scratch the consolidating part and we're gonna focus on a price or the market that is pushing to the upside and the market that is pushing to the downside. If the market is pushing to the upside, it's not gonna push to the upside eternally, right? At some point it needs to exhaust and collect some orders and continue pushing to the upside, and so on and so forth. So if the market is pushing to the upside, it's gonna be characterized by a push, then it's gonna exhaust, creating a higher low, which is a low but is higher than the previous low. Then it's gonna push, violating or breaking above the previous high and creating a new higher high. The next stage is to exhaust, creating a new higher low, and again it is a higher low because it's a low but it's higher than the previous low. Then it's gonna push again, violating or breaking above the previous highs. The most important thing to note about a market that is pushing to the upside is that it's gonna keep breaking above the previous highs. As long as we keep breaking above the previous highs, then we are still on an uptrend. In other words, we are looking to buy only. Now, of course, the opposite is true about the market that is pushing to the downside. If the market is going to push to the downside, we're not just going to push to the downside eternally. The market is going to push and exhaust, creating a lower high. And it's a lower high because it's a high, but it's lower than the previous high. Then the market is going to push, breaking the previous low, creating a new lower low. And of course, it's a lower low because it's a low that is lower than the previous low. The next stage is to exhaust, creating a lower high. Then we're gonna push again, creating a new lower low. The most important thing about the market that is pushing to the downside is to keep breaking the previous lows. As long as we continue making lower lows, then we are still pushing to the downside. In other words, we are in a downtrend, which means we are only looking to sell. I hope this makes sense, traders. Let's just recap before we jump into the charts. First thing we need to understand is candlesticks, how candlesticks form, different types of candlesticks, and again, I'm gonna link the video on the screen here. The second thing to understand is key levels, which is support and resistance, or demand and supply levels, whatever you want to call them. We need to observe what these candlesticks do when they get to these key levels. The third and most important thing is price patterns. We can't just be trading anyhow or whenever we want. We need to identify certain patterns that are going to be repeating themselves on the markets over and over again, because again, the forex market is not chaotic. It moves in a rhythm. And of course, we need to understand this rhythm, this language of the market, which is higher highs and higher lows, and lower lows and lower highs when the market is pushing to the downside. So let's just jump into the charts and put everything together so that you can understand, because I really want you to take this information and back test it as soon as you are done with this video. But without wasting any time, traders, let's just jump into the charts. any business that you're going to start, the number one question that you need to ask yourself is, how am I going to make money? How is this business going to make me money? And Forex is not different, right? When you approach Forex, you should approach it in a businessman kind of mentality. How am I going to make money? Well, the simplest way I can explain this to you is, in Forex, we can only make money in two different ways. Either you are buying the market or you are selling the market. Those are the only two ways you can make money in the market. You can't make money otherwise, right? And I feel like that's one of the most beautiful things in Forex, right? Because when you're trading Forex, you don't have to convince anybody. You don't have to see customers or deal with people or have a boss or subordinates or anything like that. It's just you in the charts. And the big question remains, when are you going to buy and when are you going to sell, right? So if you are a price action trader like me, I'm going to break it down for you. Since we know that we can only make money by buying or selling, we need to find out how we're going to know when to sell and when to buy, right? Let's take an example at the buy trade here. In my opinion, there's only two types of traders in the world. And this is very important. If you can really understand this, even if you don't know anything about trading, just listen to me carefully. You don't have to pay thousands and thousands to learn trading. Just watch this video. By the end of the video, you will know how to trade Forex today. And then from there, it's up to you. Are you going to take this information and use it? Or you're going to go,
that was entertaining. That South African boy is really smart.
But anyway, we've got trend traders and we've got key level traders. So let's start with the trend traders. In an uptrend, for a market to be considered an uptrend is the market that's going to the upside. And when the market is going to the upside, we are buying because we are looking to profit from this push to the upside, right? So how do we identify an uptrend? An uptrend is gonna push and exhaust, creating a higher low. And it's a higher low because it's a low, but it's higher than this low, which is the previous low, right? So it's gonna push, exhaust, giving us a higher low, push again, breaking the previous high, creating a new high, and retesting again, giving us higher low. This is a new higher low, right? Now, as trend traders, if we're going to be buying the market, we're only living for this moment here. You need to wait for the market to break the previous structure. This is to validate the uptrend, because an uptrend remains an uptrend as long as we keep breaking the previous highs, creating new highs, retesting, and pushing again to the upside. So as long as we keep pushing to the upside and breaking the previous highs, we are on an uptrend. So we live for these moments here. Every time the market push and break the previous highs, we wait for the market to come back and retest, so we can then take the trade, anticipating to benefit from this second push to the upside. And it's gonna look something like that. Stop loss below structure, and then you target whatever you target. I like to target 1 to 3, some people like 1 to 2, some people like 1 to 1, whatever your edge is, right? I don't recommend 1 to 1, but we'll talk about that more later. But in an uptrend, if you're going to be an uptrend trader, this is where you can execute your buys, these areas here, right? Where the market comes back to retest. These are the only places you can execute a buy. You don't take a buy here, you don't take a buy here, you don't take a buy here. You wait for the market to come back and retest the previous structure, giving you a price action that you can trade and then execute to the upside. It's going to be the same thing with the downtrend, really. It remains a downtrend as long as we keep violating the previous structure and we keep coming back to retest it, then breaking the previous structure again. So as trend traders, if we're going to sell the market, we're going to sell the market in these areas here, right? Wait for the push, exhaustion, execute to benefit from this move. So this move is going to break the previous low, creating a new lower low, and then we wait for the retest to execute here, to then benefit from this move here. And then you go for a 1 to 2, 1 to 3, 1 to 4, 1 to 5, or whatever your edge is in the market, right? Now this is a trend trader. Let's go to the second type of a trader, which is a key level trader. Now key level traders are really interesting because there is a lot of ways to approach key level trading. As a key level trader, you can either buy the bottoms and sell the highs. Just keep on playing it like that, and what you are doing is you are selling the highs to benefit from this move to the downside, right? And you're buying the bottoms to benefit from this move to the upside. So you're just going to keep on buying and selling the market until it breaks out of this zone here. That's if you are this type of a trader. The second key level trader is a breakout trader. So this type of a trader waits for consolidation to end. So while the market is still in consolidation, you don't do anything, unlike this first trader here. So you don't buy the bottoms and sell the highs. You wait for the market to break to the upside. So this type of a trader lives for this moment here. You're only observing for this moment here. I don't like taking these ones either, because then you get a situation where the market will peak to the upside and then break back inside the zone. But of course, if you have back tested this and this is the only setup you trade, after 100 trades, it should be giving you around 60 to 70% of the profits, because that's the thing in trading, right? You just need to pick your struggle and stick to it. You don't have to jump from one strategy to another. You just need to find your edge in the market and just keep on executing the exact same way, day in, day out. But anyway, that was a breakout trader. The last type of a key level trader is a break and retest, and this is my favorite one, to be honest with you. This is the safest way to trade the key levels, because then after the breakout, we wait for a retest and execute here. Now this is a good trade for two reasons. Firstly, the stop loss is really small, which means I'm risking way less, but I'm gaining much more. You can target, with this type of trades, you can target something crazy like 1 to 5 or 1 to 7 or something crazy like that. But I like being realistic. I keep it to 1 to 3, because 1 to 3 just gives me that sweet spot, because I only need to be right 30% of the time and I'm profitable. Think about that. This means I can lose 70% of my trades and win 30% of my trades, and I'm still making profit. That is the power of 1 to 3s. So 1 to 3s are really more possible with this break and retest, because if you're gonna take a 1 to 3 on the breakout, the market still needs to come back and retest, and it's gonna stop you out, because one way or the other, after a consolidation, when the market breaks to the upside, 90% of the time the market will always come back to retest before pushing to the upside. So these are the safest trades you can take as a key level trader. After a consolidation, wait for the market to break. Once the breakout happens, you anticipate a retest. Now it's possible for the market to break and continue going to the upside like that, right, and not coming back to retest. That's fine. There's no need to cry about it. You just move on to the next trade, right? You move on to the next pair and continue hunting for more trades. So now let's go over to the charts here. So we're just gonna go over a few examples here on the charts so that you guys can see live examples of the things that we were going through. Right, so let's just go to Euro USD. I really like Euro USD and GBP USD, man. They really move nicely and they give me more opportunities to trade on a daily basis. If you look here, we're looking at the Euro USD chart. It's a 5-minute chart, and I really like a 5-minute chart because it just provides me with a lot of opportunities to trade in a day, because I'm a day trader, right? So 5 minutes just provide me, man, with so many opportunities in the market, because like I always say in my videos, nobody knows what the market is going to do. The most important thing to do is to find an edge in the market and just continue executing that day in, day out. So if I'm taking 5-6 trades a day, at the end of the day, out of 6 trades I might lose 3 and win 3. If my risk management is proper, I'm making money, you know what I'm saying, as opposed to me taking 2 trades a week. What if I lose both trades? That means the entire week I would have made a loss. So let's look at these examples. We're just going to start scrolling from where we are really, because these examples happen day in, day out, especially if you're trading a 5-minute chart. They happen all the time, and you're going to see these things all the time. So looking at this, I can see our first example here. Bear in mind, if you're still new to trading, obviously it's gonna be a bit harder for you to see these setups, right? But as you continue doing it, just like anything in life really, as you continue focusing on it, you're really gonna grow in it. But let's look at this. We can see from a glance here that the market was coming from the upside, shooting to the downside, right? And all of a sudden we couldn't push down anymore. We got stuck in a range there, just kind of bouncing between this range here. And then for the first time we broke to the downside. Once we break, we just wait for a retest, and if you look there, we got a retest there. And if you still remember our setups, for every breakout there must be a retest, and this is what we live for. Execute here to then benefit from this move to the downside. Stop loss above structure, and then you can target your 1 to 7, 1 to 8, 1 to 5, but I like to keep it realistic and keep it to 1 to 3. 1 to 3 just gives me the best possible edge really, because I already explained, right, that if I'm taking 1 to 3s, I just need to be right 30% of the time. So that's the first example. Let's just keep on scrolling back. That would be an example of a breakout trader. Let's see what other example can we find here. Oh, the market just keeps on shooting to the downside, baby. Let's look at this one here. And this happen. You don't have to scroll back for a very long time, because these traders happen all the time. If you are taking a break and retest setup and you're trading a 5-minute chart, say you're trading about 5 pairs, 3 pairs maybe, you can get 2, 3, 4 trades a day. But anyway, let's just look at this. We see that the market has been pushing to the upside, and all of a sudden we couldn't break to the upside anymore. Let's just zoom out so that you guys see what I'm talking about. The market came from that downside, right? We're pushing heavily to the upside, but all of a sudden we got stuck there. We couldn't push to the upside. And if you guys remember, an uptrend should push, exhaust, push, exhaust, push, exhaust, and so on and so forth. But in this case, we can't push up anymore. The market start doing things like that now. We can't push to the upside. If you see that's what's happening there. So the market couldn't push to the upside anymore. If we drag this thing to the downside, we can see that, okay, so the market got stuck there a bit, right, before it broke to the downside. So how do we identify a downtrend? By a push, exhaust, creating a higher low, push, breaking the previous low, exhaust, pushing, breaking the previous low. So this is how we identify a downtrend, right? It needs to keep on breaking the previous low, and then we wait for a retest to execute on these levels here. So let's look at what happened here. Push, exhaust, push, breaking the previous low, right? Retest. This is what we live for, right? So we identified that, okay, this is a downtrend because it has pushed, exhaust, and it's violating the previous structure. Now it's here to retest the previous structure. Just the same thing that we're looking at right now, right? So it's something like that, and we live for these moments here. So we're gonna wait for something like that, execute here, take a sell, and wait for the market. Go for your 1 to 3, 1 to 2, or however you trade the market, right? Let's see if it did hit our take profit. Oh, we'll be sitting on this one a long time, baby. Okay, it did hit our take profit eventually. 1 to 2, 1 to 3. Okay, whatever your risk to reward is, right? The most important thing is that we hit take profit and we continue scrolling back. So now we have one break and retest trade, and we have one trend trade here. Let's just keep scrolling to the back and see if we can spot another trade here. and these guys happen all the time. Like I said, let's look at this. Is the break and retest to the upside. If you haven't seen it, you will see it just now. But what happens is the market was stuck in a consolidation there, busy push, not breaking to the downside or to the upside, right? Just kind of stuck between those zones there. For the first time, we saw the market breaking to the upside, and as you know, once that happens, what we do is we wait for the market to retest, take a trade, execute a trade, and to benefit from this move to the upside. Stop loss below structure, go for a 1 to 2, 1 to 3, or however you want to trade it, right? Just exactly like that, right? Boom, take profits. So that's just a break and retest to the upside. I'm sure you get the gist though, but these patterns, guys, repeat themselves over and over and over and over again. Once you see that the market is stuck in consolidation, and again, I really like these break and retest, man, because they really happen more often than not, more often than you think, right? Especially on 5 minutes, they really happen more often, right? If you take a look there, just zoom in, right? The market was stuck in that consolidation again, and once you see this, you just sit on your hands, right, and just wait to see, is it going to break to the upside or it's going to break to the downside. Once you see that, you're like, oh, so it broke to the downside, okay, and then you wait for the retest. Okay, so there's a retest, take your trade, shoot to the downside, stop loss above structure, go for a 1 to 2, 1 to 3. Let's see if that really did happen. 1 2 3, did we hit our take profit? Yeah, we hit our take profit before we went up. So here's your 1 2 3 there. If you missed that one, or sometimes the market will come back to retest, right? It will come back to retest, push to the downside, come back again to give you a double top. A double top is even better signal than just a break and retest. So once you see a double top, you can execute again to benefit from the move to the downside. I'm not sure how many of you guys can read a candlestick, but these candlesticks play a huge role, right? Because when the market comes back here, you need to look for certain candles before you can sell or before you can buy, right? But in this case here, this is a double top. It's a really powerful pattern to, you know, just benefit from the market, man. You can just take this to the downside. This is still a break and retest, by the way, right? Just that it came back to retest twice as a double top, and you know, the really powerful signals. But a double top is something like this. Boom, boom, and the market shift to the downside. So these two areas here, we call that a double top. Why do we call that a double top? Well, because it came back to the top double, just like that. So these ones are really powerful, or the double bottoms. And again, if you haven't watched my previous video where I talk about these patterns, I'm going to link it here. It's such a banger, guys. It will really help you a lot. So I'm just going to link the video in the description. Once you're done with this video, just make sure you watch that video. It was such a banger. A lot of people liked it, so I'm pretty sure you're gonna like it as well. But yeah, double bottoms, double top. Just don't get lost here, guys. What I'm talking about is still a break and retest. It's just that on the retest we get a double top, something like that. You see that? So double tops are really powerful patterns. Double bottoms is just the same thing. It's just that it's on a buy. So let's say this market had broken to the upside, boom, come back to retest. We take a trade here, but the market decides to come back and retest. So if you're already on a trade, if the market doesn't kick you out, you can go ahead and enter another trade here. Almost guaranteed you're gonna hit take profit. So if the market does that, more often than not, it's really giving you a nice opportunity to double down on your position to then benefit to that trade. Sure, that was a lot of information, right? But price action is such a broad topic. I really tried to narrow it down to something that you can take it and run with as soon as you are done with this video. So if you found value in this video, Please smash the like button and subscribe to the channel. Also click the bell notification so I can notify you when I come back with another banger.